super excited. How are you doing? You're welcome to another financial trading culture series on Owolabi TV. Really excited about what we've been doing. I'm really grateful for your consistency. You keep showing up. I'm really pumped up about these guys. How are you doing? How's been your trade this week? And if this is your first time that you're attending or watching this broadcast, I want you to make sure you click on the subscriber button and make sure you also click on the like button and make sure you comment in the comment box your experience so far. Guys, I'm really excited, guys, and today's topic we're going to be dealing with exit strategy part 3. Okay, guys, get your note and I'll talk to you shortly. Okay, guys, let's get to the screen right now. Super popped up. And in this third category, this part 3 of exit strategy, I'm going to be talking about one of the major ways and the only way I recommend. Now, why do I recommend this one? Is because it allows me and you to be able to hold trades more. Now, I like this one not because others are not good, but I like this because it makes you to exit a trade and go break even and keep enjoying it in case it's a swing trade. Now, every strategy has its own peculiar exit strategy. Entry strategy has its own peculiar exit strategy. For example, if you are into supply and demand trading, you want to be able to exit your trade at the opposing level, which is if you enter at demand, you come out at supply. If you go in at supply, you come out at demand. However, one of the ones that has been able to make a lot of us succeed is you understanding the power of risk reward. Now, how does risk reward have to do with this? Now, this is how it works. You want to always know how much you are risking whenever you're going into the market. If I have $100, my goal is to risk 1%. And if I risk 1%, I am giving myself at least a target of 5%. So whenever I go into a trade and my trade triggers, it means that I am expecting a minimum of 5%. Now, when this 5% comes, I am done and I'm good. So even when I am wrong 7 times and I have lost $7, guess what happened? When I am right 3 times, that will be 3 times 5, and that will be 15. That will be 3 trades times 5%, that is 15%. And that will be 15% of the money you now have, which will be like $15. So $15 minus what you have lost, guys, that will be $8. So altogether, you are still closing your books with $108. But you lost 7. So you've done 8% in as much that you've lost 7%. This is how you want to be able to scale up in the market. And I will be using the long position and short position is what I recommend. So if I have a trade in this zone and my stop loss is this, which is, let's say, 43 pips, my first take profit is 125. Okay. However, I want to make sure I break even on 1, 2, 3. You don't want to be in profit. You have risked $10 and you've now seen $30 and you now eventually lost the $10. It doesn't make sense as an investor. So what I recommend is you can say to yourself, oh, I want to go in once I reach 1 to 3 of my trade. That is my take profit 1. When I reach 1 to 5, so somebody will say, where is 1 to 5, Mr. Mayowa? This is it. This is your stop loss. The red, that is your stop loss. Look at the ratio. This ratio is 1 to 5. You can see ratio 5. And this is your take profit. Okay, so this does not have anything to do with the height. This does not have anything to do with candle pattern. But guys, it has a lot to just focus on your risk reward. Now, I like this so much because I trade more as an investor. Okay, so when I go in on a trade, I want to be able to know what I am risking. I'll use my calculator to know it. Then I say to myself, okay, at 1 to 3, take profit 1, close. At 1 to 5, take profit 2, close. At 1 to 10, take profit 3, close. Then I leave the rest trade to run. And with this, you can consistently make good money for yourself. So let me give you a good example of what happened today. So in the community, we had a intraday entry on GBP on NZD USD. So we had an intraday, and in the rule of engagement, one of the rules of our engagement is that we must be in an uptrend, which we have established from monthly time frame. So when I saw this drop base rally, I marked it. And this is our what? Our break of structure. So immediately the market came into this zone, I went to 5 minutes and I was able to catch up this entry for a stop loss of about 5 pips. Good. So it was posted on the group today. So you can see it when it came into it, and when it got into the 5 minutes, this is a 5-minute entry. Okay? Now, when the trade got there, my goal is 1 to 5. Take profit. 1 to 5, take profit. So once the trade hits 1 to 5, take profit, you are done with this trade. 1 to 5. You're done. So 1 to 5 means that if you reach $10 here right now, you have made $50. Then we now leave the second trade. So the second, right now, we will break even on every other trade. Okay, then go back to the daily zone, and from the daily zone, here will be the next supply. So if you go back to 30 minutes, this will be my second take profit. That's 1 to 10. This is 1 to 10. But at 1 to 5, you will close one of your position. If there are 2, then break even. Even at 1 to 3, you break even. As a matter of fact, one of us in the group have posted already. Now, so the dollar, they drop. I just broke even. So this is how you want to be able to enjoy risk reward. And this is a better way you can harness the market, and you will be consistently be good, and you won't have issues at all. You won't have issues at all. Okay? So, guys, this is all I have for you in the exit strategy. I'm sure you guys have gained something amazing in the part 1, in the part 2, and in the part 3. And if you miss any of that, make sure you check out our previous video or check the description for part 1, part 2, so that you can watch it again and pick the one that suits your pattern and manifest it. I look forward to your success, guys. Make sure you click on the subscriber button if this is your first time here, and if you're revisiting audience or visitor, come on, click on the subscriber button. Make sure you don't miss out in it. And guys, don't forget, this Saturday we are meeting on the part 2 on how to have and how to multiply your money in the forex market. I'm going to be revealing to you an amazing way you can use to multiply your money, and we are good to go. Guys, thank you so much for always being there, and I'll talk to you soon. Peace out. My name remains Mayowa. Owolabi. Bye for now.